We know that many of you are watching but have not taken action.
In this video, we're talking about how to start investing. We'll cover the 2 investment strategies we use and how to move forward.
What's up, Legacy Builders? I'm Rob.
I'm Reshawn.
And this is Learn, Hustle, Grow. She's a stock trader.
He's a realtor.
And we are debt-free investors. If you've been following our story, then you know that at the end of 2018, we left our W-2 jobs, and in 2019, we traveled the world.
We focused on debt paydown and long-term investing in both real estate and the stock market to achieve financial independence. On this channel, we're sharing our version of life after corporate America.
You have money sitting in your account, but you haven't pulled the trigger. Why not?
We understand that it can be hard to know where to begin. If you want to invest in the stock market, start by establishing your goals. What do you want your money to do for you?
By the way, we're dropping gems at no cost to you. Help others see this video. Like, subscribe, and leave a comment below.
Are you investing for retirement? Are you seeking financial independence? Do you want an additional stream of income? Where you start depends on your vision for your life.
Disclaimer, we are not financial advisors. We are not making recommendations. We're just giving our perspectives.
A significant portion of our investments are in retirement accounts. A solid retirement plan is an important step of building generational wealth. Generational wealth is part of our long-term vision.
Knowing that we had sizable retirement investments also gave us the courage to leave our jobs.
There are different strategies for investing in the stock market. We'll review the 2 that we're most familiar with: technical analysis and fund investing. What's your investment strategy? Comment below.
Technical analysis is used in short-term investing. As traders, we actively trade ETFs and individual stocks.
Candlestick charts tell us when to buy and when to sell. We move in and out of the stock market, trading positions for income.
We use fund investing to achieve our long-term goals for financial independence and retirement.
We invested a buy and hold strategy using mutual funds and exchange traded funds through our retirement accounts. Assigning a percentage of your paycheck to go to the investments of your choice is a passive investing strategy.
Most funds compare their performance with an index like the S&P, the Dow Jones, or the NASDAQ.
You can purchase mutual funds and ETFs that align with a specific index or a specific industry. But before you can make a purchase, you've got to smash that like button and subscribe.
Get started by opening an investment account. The type of investment account depends on your goals.
There are various versions of retirement accounts. There's also an investment account, which is a taxable brokerage account. Think about how soon you're going to need access to the money. Once you've decided the type of account you need, it's time to choose a broker.
We've worked with some of the big ones. Check out Fidelity, TD Ameritrade, and Schwab.
If your plan is to trade stocks, look for an online broker that offers a simulator. Getting good at anything requires practice. Of the 3 we just mentioned, TD Ameritrade is the only one that currently offers a simulator.
Most brokers allow you to open an account online. If you need help, then you can call the toll-free number or you can go into a branch.
After you open the account, you have to put money in it. I know that's common sense, but you want to have the money in there before you're actually ready to make a purchase because it can take 3 to 5 business days before those funds become available.
Before you place an order, do your research.
Consider your risk tolerance. Remember, risk and reward go hand in hand. You cannot make money in the stock market without accepting some risk.
If you want to trade individual stocks, start by creating a watch list of the companies that you're interested in.
We want to buy stocks closer to the 52-week lows than the 52-week highs. Unfortunately, most of us don't pay attention until everything is near all-time highs. What goes up must come down. You can and will lose money trading stocks.
Before you start trading, take a course to build your skill set. We'll leave a link to the Invest with Terry Trade and Travel course in the description below.
If you are following the financial independence movement, you may have heard of VTSAX. J.L. Collins champions this mutual fund in his book, The Simple Path to Wealth. VTSAX is a total market fund.
There are over 4,000 positions in this fund. More positions offer greater diversification.
VTSAX requires a minimum investment of $3,000 when purchasing directly through Vanguard. However, Fidelity will allow you to purchase the fund with a minimum of $2,500.
If you are starting with less than $2,500, consider a total market fund managed by your specific broker.
You can find the total market fund for your particular broker by typing in total market in the search field. The majority of our assets are with Fidelity. The Fidelity Total Market Fund is FSKAX. The Schwab Total Market Fund is SWTSX.
These are mutual funds with low expense ratios. There are also index-based ETFs available.
VTI is the symbol for the Vanguard Total Market ETF. ITOT is the Fidelity version, and Schwab uses the symbol SCHB to represent their total market ETF.
Unlike mutual funds, ETFs can be actively traded throughout the day just like stocks.
SPLG and SPTM offer the kind of diversification we look for in long-term investments, but as ETFs, they move too slowly to trade.
Priced at around $50 a share, these ETFs allow investors to get more shares for their money.
By comparison, SPY and VOO are very popular S&P 500 ETFs. However, they're currently trading at almost $500 a share.
Expensive.
When you're looking at your options, if you find that they are limited, consider a target date fund. They have proven to offer pretty good returns and generally have low expense ratios. The further out the retirement date for a target date fund, the more aggressive the portfolio.
These are just a few choices available. How do we decide which funds are right for us?
Well, we look at the top holdings, expense ratios, rating, and fund performance. What are the criteria you use for choosing your investments? We want to hear from you.
If all this sounds too overwhelming, then seek professional advice.
Ask a friend or family member for a referral. The important thing is that you start investing. Don't let another year go by without putting that money to work.
Help us spread the word. Share this video and leave a comment below.
See you in the next video.